So what we're going to be doing here is taking a look and seeing how our portfolio has done over the last couple of days, because it has, of course, been a pretty down market across the board. So right over here, in case you're new here, my name is Dennis, and we have our portfolio nicely named Dividend Dennis because we do like to focus in on dividends, but that doesn't mean that we aren't affected by the market, of course. Current value on the portfolio is at 23,664, so that's actually down from our high points. I would assume a lot of other people are too. So you could see here, over the last day, our gains are down $281. And then if we go to the week, we're down 463. And then if we go to the month, let me clean that up there, we're around almost $1,700 down. If we go to the quarter, we're actually now down for the last quarter by about $100 because we did have some really good gains over the quarter time period. If we go to the year, we're actually still up about $288. And if we go to our all-time, we're up about $3,000. And for anybody that's wondering, when it comes to getting started, check this out. I started with $100 in this account, so I don't want to hear people saying that they can't get started with a little bit, because you can. And M1 Finance, this platform definitely lets you do so, which if you're interested in that, go ahead and check out my link in the show notes down below. You can go ahead and get started with dividend investing on a platform just like M1 Finance. It does support out the channel, so I do appreciate it. So let's kind of take a look here too, because what ends up happening for me, if we go to my holdings, I can show you guys my unrealized gains. We are still up about 9.44%, which is about $2,000. I think we were upwards of like almost like 17, 18% at one point. So, that's obviously kind of sad sometimes when you see your value going down. We do have a little bit of Tesla, which I know I've gotten comments before telling me that, hey, you're not a dividend investor because you have Tesla. I'm still a dividend investor. I just happen to have a little bit of Tesla in this portfolio too. So, I mean, I do what I want, I guess, but I'm still a dividend investor. You can see here, what is it? Today's the 4th, obviously. So on the 4th, we did a little bit of investing. On the 3rd, we did some more. On the 2nd, we did. I'm like addicted to buying when the market is down. So it's actually not a good thing sometimes for me, because I'm just wanting to keep on putting more in. So if we go here on the morning trades, so I did about $150 trade. Some of it was just manually done by M1 Finance, so keep that in mind. Some of it was, me choosing to do some of this myself. Let me kind of move my face up here. So you're gonna see here with Amazon, we did about $5. Johnson & Johnson 6. I did do a manual buy into Ross for 50. Now, I've been investing into Ross for a long time. They did cut their dividend last year, but they actually just announced that they're reinstating their dividend, which is fantastic. I'm obviously excited. It's a low yield. It's about 1% based off of its current price point. I believe with my price point, it's like 1.5% for me. That's yield on cost, by the way, in case you don't know that. But I love the company in general, and with the market going down, it was a good time for me to buy more in, even though my dollar cost average has gone up, because it's still a little bit higher than what I was originally paying for. No problem though, because I'm all long term, which hopefully you guys are as well. Then we got a little bit into Microsoft. We got some more into NextEra Energy because they've been down a little bit. We did some more into Home Depot. Their ex-dividend date is coming up soon, but also too, they are down in my portfolio. I think as a whole, I'll double check that. And then we did some more into our ETF for the S&P 500 growth, and then a little bit went into Texas Instruments. I think I'm also down on that too. So let's take a look at Home Depot really quickly. Actually, let me go into the holdings. So I'm officially down on Home Depot by 3%. Now that's the official unrealized gains. M1 Finance does this thing where I can, let me see where it is, retail. I can also have it calculated in there, my dividends. So like my dividends earned, which means my gains are, down less than just the overall market, because if I didn't have the stock, I wouldn't have earned the dividends, yada, yada. So you can see right over here, we have 4 shares of the stock now after that last buy today. So 4 shares kind of looks really nice when we have a new solid number, because with fractional shares that M1 Finance lets us do, sometimes it's like 3.88 shares or 3.98 shares, and it's like it's nice to be building up small increments, especially when stocks are $250 a share. It's hard to like put $250 into one stock. So for me, I love the fact that I can do splits and on my money and be able to do fractional shares. So with them, they're currently trading for that 250, and my average share price is 258. So obviously right now I'm dollar cost averaging, which means I'm gonna have this lowered every time I buy more right now if the stock price stays there. But check this out. On Seeking Alpha, let's kind of go ahead and swap over here. So let's go to my portfolio, and let's go to Home Depot. Let's go ahead and just click on that. So with Home Depot, their PE ratio is solid, 20.28, so that looks good there. What I really like, of course, is their dividends. Now, their dividends, you can see right over here, are not the 4% that a lot of people like to talk about. They're 2.56%. Check out this. If you haven't seen one of the more recent videos, where's the dividend news? Interesting. Okay, so they changed out the dividend news. I don't know where that went, because normally it's up here for us. Let's see if it's in the history. Yeah, I guess it's not there. That's interesting, because like normally it's like right over here. Well, I did estimate, but that's not what I meant to click on. Yeah, normally we have like dividend news right over here. That's kind of strange for us, but nonetheless, maybe it's in the dividend growth. Maybe they're changing this up on us. Okay, well, those are all individual ones. So if we go to the dividend history, you can see at least right here. So their last dividend was paying $1.50. Now they're paying $1.65. So that was a healthy increase. And that's something that I absolutely love when it comes to investing into dividends, is their dividend increases. So I'll have to double check for like future videos to see where they're gonna have that information. You can see overall like just the amount of growth that they have with their stuff too. Yield on cost has gone too. They like pretty much changed up this whole website. So if you've been following along for a while, like I'm a little like perplexed on their website being changed up so much. Oh, here it is. Okay. Yield on cost is right here. This is what I absolutely love. So yield on cost right now, 2.56. If you bought 5 years ago, your yield on cost, if you didn't buy anything more, right? Because if you buy more in, that's going to change up the numbers. Your yield on cost is 5.21%. Like that's a really healthy dividend, especially in just 5 years time. Like, what are you talking about? Like, of course I would want 5% on my money. Obviously, if we go even further, like you can check this out here. Look, I mean, granted, there's a really nice point there too. You'd be getting 10 years ago, if you bought in and then held it, you'd be getting 17% on your money. What? Like, that is awesome. That is just really, really cool yields. Granted, it took 10 years to get there, but one, throughout that whole 10 years, you're getting those dividends. And then on that 10th year, if that dividend is there, you're getting 17%. That's just great. So that happens with yield on cost. That's with companies increasing their dividends year after year. Home Depot's average, because I can still see the average here, is 20%, but it's definitely not been 20%. I think it's been like 10% the last couple of years or so. But still, nonetheless, it's good. Their payout ratio is at 52%, so it's underneath 60, gives them a lot of room for continuing the growth over time, which is always really good. But that's just Home Depot themselves. I keep talking about them. I am really, really loving them overall in my portfolio, even though they're down, which is funny because a lot of people freak out when their stocks are down. I tend to buy more. You saw all my purchases that I've been doing. So this one is about 40% of this portfolio, which my retail portfolio or retail stocks are around 10% of my whole overall account. So it's a healthy portion, I would say, overall on this M1 Finance account. But nonetheless, I think it's still like really, really good to be, making sure that I'm diverse, but also putting more in when I'm really excited about a stock. Because let's go look here. I'm like making the case for people to buy Home Depot. If you guys own a Home Depot, let me know down below too. So yeah, look at this. Just in the last first 4 days of March, I put 30, 25, 35, 25. Like, come on, definitely a lot. You can even see like later on, like I was putting a little bit here and there, of course you can see here, but like, yeah, just over the last couple of days, I've been putting in a lot more. And like, that's a big thing with long-term dividend investors, is that if your conviction on these companies are still, serious and you believe in them like long term, when they're down, that just is a buying opportunity for you. It's like something is on sale. It's like you go to Home Depot and the thing you wanted to buy is on sale. That's the most prime opportunity because you were planning on spending the money regardless. Why not buy more? And so when they're down 250 to 250 versus my 258 price point, I'm just going to keep buying more in. Like, yes, keep doing stuff like that too. So, I know I get a lot of people that get scared, that get worried about this kind of stuff, but, in the last month, that's a huge drop, right? Like over the last month, $1,600. Check this out. I put in like $3,000 over this last month as well. So the market's gone down and I keep buying in. Now I don't know when the bottom is, right? So if I show you here, so let's clean this up here. And this is important, right? So if we just do our, let's just do I could have just done trades only. That's funny. So right over here, you can see, buying. Now, if I knew that, March 4th was going to be the lowest point, like if I knew that, which nobody does, I wouldn't have bought on the 3rd and the 2nd and the 1st. I would have just put all my money on the 4th. But we don't know when the bottom is. We don't know if this is a short-lived situation or if it's going to happen long term. So, for a lot of people, it's called catching the falling knife, which is what I like to do, where I'll just keep investing more and more because I just don't know when that bottom is. I don't want to be caught where the market's going back up and I missed that opportunity. Sure, I paid more for, my Home Depot stock and everything else on the 1st versus the 4th, but I still bought in. And it doesn't matter, because if in 3 months things recover, or if in a year things recover, I'm going to be good. I tell people this all the time. So if you look at the history of the stock market, right? Let's just go to the S&P 500. Let's just go to 10 years. Check this out. Look, we are going up. Boom. We hit a big drop. And look how long it takes for it to recover. Now it's recovering. Boom. Drop. Going up. Boom. Drop. Keeps going up. Little drops here and there. Has a really steady increase. Drops. And then recovers really quickly in 2014. Has a big drop for a couple months. Recovers for a few months. And then drops again. Right? For a lot of people, it's scary in the moment, but when you look at history, it goes up and it goes down, goes up, goes down. So for us, this was 2020, right? So it dropped pretty dramatically, probably one of the biggest drops in a very long time. But then look, it recovered in just a couple months. Now, am I saying that this is going to recover in a couple months? Probably not. Probably will. Who knows? Nobody knows. But the chances of it recovering overall at some point is going to happen. Otherwise, we got other problems if the market's not going to recover at any point. And sure, sometimes these recoveries, what's this point here? So that's 2018, and it takes what was that, October? So October 2018, that was 2,900. So it took until April of 2019. So it took 4, 5, 6 months to recover back to where it was at this high point. That can feel like a long time for people. But if you're in the market for a long time, so what? You're just buying at a discount for those couple of months that it's down. So if this is going to be down for a few months, then it's going to be down for a few months, and that's okay. But just, don't be fearful of going through and selling if you're trying to go in for long term, because if you sell now, you are guaranteeing those losses. Now, granted, some people might be selling because they have high profits and they just want to take them. If we go into our growth pie here, I'm still up $600 on my Tesla stock, even with the market dropping the way it has. At its peak, it was much, much higher. If I sell now, I'm still good. I can sell now and I'll still have made $600 in profit. I can take that money and invest it in other things, or I could just keep it because I believe in Tesla for so long, or for the long term, I should say, that I'm just going to hold it. And it's fine that it goes down for a little bit because it'll recover. And I believe in the company, and I know that I'm going to want to hold it for 10 plus years and not want to sell it for a quick gain. And that's okay if you do, by the way. I'm not judging you if you're hey, I want to take my gains from Tesla and just kind of walk away. Do it. Same thing if you had GameStop or AMC and you took profits. You do what you need to do to make sure you're good. For some people, they might want to hold it for longer. Some people might not. So as a long-term investor myself, and for anybody who's interested in dividend investing, I think you got to be with the mindset of these companies you want to hold on for long-term, regardless of how the market's doing, because you believe in them. If you sell, you should be selling for good reasons. I sold out of Pfizer recently. I think Pfizer was the last company I actually sold. So I sold Pfizer back in October, or February, I should say. Sorry, excuse me. for $34.94. Now I only sold them not really for a profit because I made a little bit of money off of them, but I mainly sold them because I just didn't really believe in the company long term for my focus on dividends and what my portfolio was trying to achieve. So I was better off with the other companies I had, and that's okay. So if you decide to sell, go for it too. But with the way the market's going right now, I would believe that if you stick with it long term, keep buying. During the downturns, that's fine. Sometimes people might not have as much capital to be able to invest on a regular basis, but do what you can. $10 a week, $10 a day if you can, even better. Even if you see that money going down for a little bit, fear not. If you're in it for the long term, it is going to be really, really worth it. Now, I want you to keep on watching and learning when it comes to investing. So check out my video right down here so you can keep on going through this process. My name is Dennis, and I'll see you in that next video.